What's up, everybody? Episode 60, special alert. STX just spiked, but let's get right into it, okay? STX spiked, but let's get into it anyway. Institutions are trying to steal from you, okay? This is like a sermon. They're trying to manipulate the market. That's what they do. They instill fear, right? You scare sell. You take the loss. They always do it based on the options, right? They're selling you the call options. They're manipulating the stock under a certain amount. You'll see the following Monday, it'll spike. They do the same thing with put options. I'll give you an example. Goldman Sachs came out with Tiger, all right, T-I-G-R, which we know we talked about a lot. They said it'll be underperform, sell, price target $21. Guess what? Tiger's at $19.88. Manipulation, pure manipulation. They had their put options. They sold you the call options, and they pushed Tiger down. Now, I spoke about this morning pre-market, and some people said to me, what do you think? Buy puts? And I said, no, I'm just going to stay the heck away from it. But Tiger was like, what? $19.80-something cents, approaching $20. And where did it close at? $18 and change. The point is, they manipulate the market. Why? Why do they do it? To take your money. To make money, to take your money. That's why I'm here. I'm trying to educate you. I'm trying to make you an efficient trader, a more efficient trader, okay? That's what my platform does. That's what I do through Webull, and that's what I do through YouTube. I tell you, plan ahead, secure profit, and repeat, okay? Now we're going to talk about some general positions the general public wants to know about, and then we're going to talk about my positions, okay? So the general public, Space, okay? I alerted at Space when it was $49 that they were doing an offering. Anytime any company does an offering, it goes down, okay? It's now $33, which is a 32% drop, which equates, if you have a put option, which I only bought one just to test the waters, right? And then it went down 304%. That's what I'm returning on that option. Now let's talk about what is it? Charge point, right? CHRT. It was at $28. Offering, okay? I announced offering. It was down 4% pre-market yesterday, okay? What happened to charge point? It dropped yesterday 10%. It dropped another 7% today. So again, my platform members, the ones that bought those puts when I alerted pre-market yesterday, they made 102%, and they didn't even get max value. Okay, now let's talk about AMC. Now, again, I did a YouTube when AMC struck 72 that day because I did a broadcast live on my public Twitter, and I said, get the hell out of AMC. It's not worth more than maybe $16 or $19, okay? And yes, I was a supporter of AMC on the way up to $19, and that's all I rode my options to. I could have got a lot more money, so I admit, yeah, I left a lot on the table. The point was, I'm trying to make you an efficient trader. I'm here on YouTube trying to teach you efficiency. So here's how it is. It's not that I don't support the apes, but if you sold at $72, right, you had 1,000 shares, and you bought back, let's say you didn't even buy back yet. You buy back at $33 instead of $72. Guess what? You get to more than double your position. If you had 1,000 shares, now you're supporting the cause with double the amount of shares, which is what you want to do. You want to take as many shares off the market as possible. But you're not to buy the ask. That is just silly. Anytime you want to support the cause, please remember, you're playing with real money. Now, if you have unlimited amount of money and you want to go into AMC and just keep buying shares, great. But if not, when it spikes, you sell. When it dips, if you want to support the cause again, you buy back. All right, so let's talk about Space down 17%, 32% since I alerted to sell that shit, okay? Charge point, since I alerted offering, it went down what? 16%, no, 17%. All right, now let's talk about AMC. What did you guys drop today? 15%. 7.5% yesterday, and the day before was like 7.5%. So do the math. That's 30%. I get you want to support the cause, but losing 30% of your portfolio just in AMC, that's just silly. GameStop, when it was 306, I said it's worth about $160, and that's where it'll go to. Now I think, I don't even know where it's at. I think like 180. The point is, it's like if you like a lot of paper cuts, you like torturing yourself, yes, you can still support AMC, still support the cause. Go on Reddit, do all your typey things. Just don't have 1,000 shares. And someone said to me, what would you do today when it was at 35.50 something? And I said, I would sell. I would wait till it goes under 33, and then I would buy back if I wanted. At least I would save 10%. So the point is, I'm not telling you not to support the cause. Be a smart, sound investor. Now I'm going to talk about my positions, all right? My positions, a lot of people on my platform. Oh, let's get to a lesson real quick. A lot of people on my platform, some people are struggling. They average down a Tiger, E-bond. Chinese stocks suck. or they got beat up in AI like me. I had a stop loss. I lost 82%. Transparent as to be. I admit my losses. Now here's the catch, okay? I had 16 contracts of AI. So I lost about $5,700. Do you know how much money I have in UVXY? I have 28,000. Do you know how much money I have in STX? 33,000. Okay, do you see what the difference is? The difference is it's a smaller portion when I get on every day on YouTube. And if you don't believe me, go back 10 episodes. Every freaking episode, I tell you guys two things. Just two things. Two things I'm sure about. And this is why I can't understand why everybody's not killing it. You have some positions, yes. Carnival spiked. I'm going to talk about that real quick, how I got out of that this morning. But the point is, STX is going up. When it was $84, I said it's going up to $90. I still think it's going up to $98. UVXY, anytime it spikes, unless you think the market's totally going to throw up on itself and it's going to spike to like the moon, okay? We buy puts. Those are two things I talk about every freaking day. All right, so my positions, STX, 4 times I went in and out today. I sold 3 times. My last position, I mentioned I had FOMO. It was at $89 and like 75 cents. It even went down about 40 cents after I had FOMO. So I kind of overpaid, okay? The point is I wanted to be in before the close of the market because as I mentioned on every single YouTube, that STX has a chance to spike pre-market. That's what it likes to do. When it went up from 64 to 104, I didn't buy in every day because it spiked pre-market 3%. And I was like, I can't buy $2 more. So yes, I want to be in STX overnight when it spikes. So I have options expiring Friday now. I have options expiring the 23rd. I have options expiring August 20th. All right, I speak about STX every UVXY. I speak about puts. So here, STX, I sold my position today. 25%, 28%, 32%. All right, add it together. I think that's like 85%. So I didn't ride the elevator up and down. I made 85% on STX. Yes, I can day trade. So that's the advantage I have over you. But if you can't, I'm telling you, STX, I even tweeted out at $89.20 when it dropped. I'm getting in again. That was my 3rd time I was getting in. And then I got in at like 3 o'clock, something like that. And then it went down. But I said, I want to be in for after hours. And some people said, not me, yes, me. All right, Carnival. Yesterday, I took a shot with Carnival. This morning on the spike, and it was up like 3%. I sold. I took profit. Did I think Carnival was going higher? Yes. Do I think Carnival is going higher now? No. Why? Because someone did a put sweep, which means they bought every single put contract under $23 that expires in 2 days. So they're keeping Carnival under $23 for 2 more days. Okay, and I'm going to get to what a put sweep is because I know people don't understand what that is. So give me like 4 or 5 minutes and I'll get to that. So my other positions. All right, UVXY. 52%. That was my morning position. Then I sold. Then I re-entered when it spiked at $28.48. I bought $29 puts in the money. I was on a call with a private member, right? Private lifetime member. I paid $1.60, and then we're talking about. I go, oh my God, it's spiking more. I'm going to pay $1.54. I told him you put in a bid for $1.51. His name was Ian. It didn't execute. I said, Ian, it worked? No. $1.52, Ian. $1.52. He said, no, it didn't work. $1.53. Then he got the same puts as me. Okay, so we bought the $29 puts that expire this Friday. We paid $1.54. He paid $1.53. Now, why do I get so anxious about it? Because on the UVXY, it moves so quickly that if you don't act quick, you can't jump in at the top. All right, that's why I told him, make sure you get it, make sure you got it. So as soon as he told me he got it, boom, it went to $1.60. So I was like, okay, we got it just in time. Now what happened? When it went up to $2.54, a whole dollar or 65%, I sold. And I alerted everybody, I sold. So no one can claim I'm a backholder. Why did I sell? Because profit's profit. I just made 65%. I had 220 contracts. I don't know how many Ian bought, but I'm assuming he covered his lifetime membership. I charge $3.49 a week. I haven't said that. So if you're getting some value in stuff that I'm saying or lessons that I'm sharing, please hit the like. Try and subscribe to my platform. It's $3.49 a week. If you don't want to, at least come back to me on YouTube every day because I give you some decent, good information. All right, so UVXY, again, I got out, I alerted. I still think it's going down. Doesn't mean anything. Now, a bad position. FCX, I alerted. I bought 1 contract. It went down 50 cents. I thought I created a sale for myself. Do you know what happened? I bought more contracts. It went down another 50 cents. I'm down $600, and then I lost another 27. I'm down $3,300. Snap. All right. I bought a ton of Snap contracts before close at $1.11. I alerted. Where did my platform members get in at? $1.08, $1.06, $1.07. I saw all those tweets. I see it. Yeah, you guys get in better than me. 3%, 4%, 5% better. It closed at $1.24. It spiked to $1.36. So I think Snap's going to have a hell of a day tomorrow. Now, the good thing is it's not a freaking Dow stock. We speak about rotations back and forth. Yes, they're selling airlines. They screwed with us this morning. So what happened this morning? They screwed with you. Institutions let you believe Delta, airlines, every airline, Carnival, cruise ships were going up. And then what did they do? They sold into you. And it went negative. And then when you guys were selling, snowball effect, they were buying the absolute bottom. So what did they do? They saved $1 or something like that. If they save $1 and you're talking about 300,000 shares, that dude who gets $100,000 a year, that's his job. He just made $300,000 for the company. That's how the company makes money. So anybody that doesn't understand manipulation, watch. The market opens high. Institutions do nothing. They don't sell anything. In fact, they may preempt some buying and make it look even better. Then you guys, retail investors, push American Airlines up 7.5%. When that happens, what happens? The institutions, the hedge funds, start selling and forcing shares on the market, forcing the stock down. Do you guys get it? And then you guys, the retail traders who are like, oh man, I just got in this one for a swing play, end up selling even cheaper and forcing it down more. So from 7.5%, it probably goes down to like 1% or 1.5%. What happens then? The institutions, they buy it back. So what do they save? 6%. They don't do that to save 6%. Damn right they do. Institutions, 6% on what? Like 20 million bucks. Do the math. What is that? Like $1.2 million? Okay, great. Now you have rows of these guys. That's all they do. They sit in rows in front of a desk. And yes, if you're watching me at Morgan Stanley or one of these hedge funds, I know what you guys do. I understand. And it makes sense. And most of it's done by algorithms. So you're out getting a cup of coffee, getting some lunch. When I used to work for some of these companies, I used to go to the gym, get lunch on the company, take a car service home on the company. I mean, that shit was crazy. Now I understood how they paid for it. They manipulated the shit out of you. All right, so I know I'm going on for a while. But again, so the difference, I also wanted to tell you guys, the difference, again, UVXY, I have $30,000 worth. STX, I have like $33,000 worth, okay? When I mentioned I take a position in FCX this morning, I bought one, okay? Then I bought 100 more contracts at 64 cents. So I'm in for like, what, $6,500, $6,600? Now I'm in for these other positions for 35 times that. So when I talk about the UVXY and STX going up, UVXY going down for 2 weeks straight, understand the difference. It's like if I was a sports bettor, I'd be like, 5-star play, 5-star play, 5-star play. So if you're on my platform, you don't understand the difference and you're like, I'm struggling with Tiger, Ebon, AI, Delta, Carnival, NNOX is pretty good. I mentioned I sold my NEO today. Remember when NEO hit $55, which was my price target, I didn't execute. Now what happens? I suffered. I sold it at $43.60. You know what that is? That's $11 per share. And I had what, like a couple hundred shares. That freaking sucks. All right. That's why when price targets get executed, that's why we plan in advance. We don't get greedy and watch the stock as it's going up. We plan in advance to get our money. It's not your money until you sell the order. All right. So one more thing. Somebody mentioned to me they blew up their account. They showed me they had 3 Tiger contracts. I think they were in for $800. Now their account has like $10, $15. Okay, so when I talk about ways to blow up your account, all right, you need to keep 10% in one position. So if you have an account, for example, of $5,000, the most you want to be invested into one position to safeguard yourself, whether it's UVXY, STX, I don't care what it is. All right, Snap, which I bought today. Okay, no, you don't want to have more than 10%. So you buy the option. Snap was $111. So you buy 2. Okay, if Snap goes down to like 60 cents, you buy 4 more. You're still in for less than $500, less than 10% of your account. That way, if Snap does shit, you don't blow up your account and call me an asshole. All right. So if you put all your eggs in one basket, Ebon, Tiger, Futu, any Chinese company, then that's your fault. I mean, and I'm not blaming sleaze. The worst thing I want to do, the last thing, is blame somebody. It's not. It's your fault for not following the rules. If you went into Tiger, which was okay, you bought one contract, you could not average down because you were risking your whole account. So your one option would have been worthless, but you still would have had about $550 on the side. And if you played another position like STX or UVXY, you could make back your money. But you can't make back your money when you blow up your account. If you're too heavily levered into one commodity or one stock or one options position, you will blow up your account. It's only a matter of time. Then you have to grind it back. And the grinding back, the light bulb finally goes off and you're like, all right, I take 30% secure, 40% secure. I don't have any day trades left. I'm going to wait 2 days. Or you can enter into something knowing that you're not going to sell it to the next day. All right? Everything's possible. Okay, so spreadsheet. People mentioned they're having problems with the spreadsheet, so I'm going to talk about it real quick. They're like, I missed the minimum entry. So when you're talking about a stock, like STX goes down to 89.20, and then it dips to 89.18, then it goes back up, then it dips again to 89.20. Stocks, double dip, triple dip. The ETFs, SQQQ, they move with the market. So once the market picks a direction, or the UVXY moves with the market, it's spiking, but once it decides the market is calming, it's going to drop pretty freaking quick. So when you tell me you didn't get into the UVXY when it was spiking today because you were planning and you were saving the extra 5 cents, I tell you, when it comes to ETFs, that's bullshit. You want to be in. If you're calling the direction of the market and you're like, okay, tech's going to take off, you want to be in as soon as possible. When you're calling a stock, nobody calls the bottom of a stock. I've tried to call the bottom of every freaking stock. And you know what my spreadsheet looks like? That FCX one I'm adding, 50%. That's how much I missed the bottom by. So if you don't know about my spreadsheet, you have to watch my other episode. I don't remember which one it is. Please, now that you've been with me for like 15, 60 minutes, please hit the like button. It matters. It's analytics. You're listening to me, gathering information. I'm going to answer questions for you guys very soon about your own positions. Please hit the like button. This shit should have like 500 likes. Please share this. You guys say you do, but it's really about bettering yourself at trading, making yourself more efficient. So please share this with a couple people. Just send them the freaking link. Say, hey, this dude might know what he's talking about. Yes, he's not an ape. He doesn't like AMC or GameStop, but he makes sense. If I had sold AMC at 55, I could have bought back. Okay, AMC, someone tell me something, but I don't care yet because please share this with a couple people. Now, for the 3 individuals that come here every day to give me thumbs up, number 1, thank you for watching. Number 2, it helps analytics. Number 3, go F yourself and go kick over some kids or cats or whatever else you do because you're crazy. If you think this is thumbs down, and I'm not touting myself, I'm here to educate. Don't watch me thumbs down, okay? You don't like what I have to say, you don't think my theories or rules work, then you're not going to be part of my platform. You have $3.49 to try it for a week? Yes, all my rules, lessons, psychology, trading, it's all on my website. Then you get access to private Twitter. Now, the great thing is we're creating a community so that everybody can interact with each other. No, I hate Discord. Discord sucks. Anyway, thank you for watching. Let's go into some slides, and then I'll answer some questions for you guys. All right, let's see what we got for slides. Or maybe we'll just pop into questions. I don't know. I'm not really seeing anything. All right, so got any slides? Oh, here we go. Okay, so I don't think this was number 1 on my slides, but this dude's giving me, no, now we're going back and forth. Stay with me one here. Here we go. So this dude yesterday, so this is a day old. Now, the great thing is he tweeted me this morning, his account's up to $5,400. He didn't sell yesterday, but he followed the process. He trusted the process, right? So it says, thank you for your teaching. Me and my family are very appreciative. Okay, so what I'm trying to teach you guys is how to be more efficient. It's not, so real quick, I'm going to go off this real quick because it's not about my alerts. If you think you're paying $3.49 or 50 cents a day to get my alerts, to get all these winning trades, yeah, I trade successfully, but I average down the right way and I diversify and I know what I'm doing. So if you think you're paying $3.49 to get all these winning trades, I'm going to try my hardest and I share with you what I'm doing. And going forward, I mentioned we're only going to be in 1, 2, or 3 positions going forward. We're not going to spread each other out because I know a lot of you have little accounts and you can't do that and you don't know what to average down. So if we're all in the same or similar position, different strikes, I can be like, okay, it just fell off the face of the earth. I'm down 43%. I'm buying 2 more contracts. And everybody can do something similar. And we put in bids, and now it gets executed by computers. So real quick, that's pretty important. Going forward, I'm going to simplify the platform. I will talk about and give lessons and show you guys when I expect spikes. But any information like that, or I say an offering and you guys short the stock, that's on you. You guys are doing great. All right, let's get back to that slide. I'm sorry, Carlos or John or whoever put that up there. But somebody did say STX was doing something after hours. Okay, so this dude wants to give me thanks because sometimes he feels like he's cheating me because you only pay $3.49. He picks his own points He follows the rules. So this stock, I don't even know what it is. TECL. The point is, it spiked. This dude secured profit. The guy that asked me about a stock yesterday, and I mentioned it could spike to like 65.50. It spiked to 66 this morning. He was just asking yesterday, what's the spike? And I was like, here's the spike. He got out with profit, and he's looking to re-enter. Next slide. I don't even know if I have that slide, or I'll save it for tomorrow. This is another dude. Thanks. You're the best. Again, it's not about the stocks. It's about the theory. The platform is to make you a better trader. The platform is to teach you secrets, tips on how to get the best entry, how to plan ahead, how to not get yourself in trouble with too many day trades, okay? So if you have limited day trades, then you wait. You don't need to be in every single position, all right? It's about winning positions. Not every position is a winning position. If you're in a tough position and you get beat up like AI, right, and you lost 10% of your portfolio, you had $1,000, you had 2,000, now you have 1,800. That hurts, but we build it up. When you put too much into one position, you blow up your account. All right, next one, please. Thank you for that. All right, this is what I texted pre-market. All right, I tweeted. Goldman Sachs came out there bearish on Tiger, right? Tiger was like, went up to $19.88, maybe even $20. And people said, should we short it? I don't want to mess with it. But how manipulative are they? So I talked about at the beginning of this live stream how manipulative the institutions are. So if you missed the beginning, please watch it again full cycle. All right, let's go back, please. Get another slide up there. Can we do that? All right, here we go. Yes, this is Goldman manipulating the market at 8:08 a.m. They give a price target of 21.10. Guess what? The stock was at $19 and change, $19.40 pre-market. What do they think? It's news? They're lowering the price target to 21.10. This is the bullshit I'm talking about. They release news based on certain things. They wanted to kill anybody's action going into through Friday. So I would like to say that if I were going to be positive about this stock, which first, I'm not positive about any Chinese stock anymore. I'm keeping it US or something else, man. I just don't want to be involved with Chinese stocks. What kind of bullshit is that? All right, next one. Manipulation right there. All right, change my mind on plug. Yeah, I was going to sell plug options this morning. I changed my mind because the Democrats passed a bill. But guess who was right? Me. I was right. Plug, I think, was off 4 or 5%. It had good volume this morning. I could have got out of the position. That position was up 100%. I didn't want it to go negative. I'm pretty darn sure it's probably negative 10 to 15% right now. So I'm pissed at myself. I make mistakes, okay? That one is on the spreadsheet. I'm going to continue to hold right now. All right, next slide. What was this one? XL had some news. So remember, I averaged down with XL. I thought I got rid of some of these slides, so I don't think this is accurate. All right, next slide, please. Next slide, please. Yeah, I mean, okay, you know what? I'm done. Let's go on to the next slide. UVXY, I'm just showing you guys. I appreciate you guys bearing with me. I'm having some frustration because I had a bunch of slides. I believe I removed some and trimmed them down, and I'm seeing all of them. And anyway, next slide, please. Just showing you guys how we make money in the UVXY. All right, STX, great results with XTX. Upside, what did this guy have? $86 calls. He's up $4,000. He has 10 contracts. So again, I charged $3. If say this is the only freaking trade he entered into and he made $4,000, yes, it's worth it. I don't tell you guys to enter into every single freaking trade. But when I'm here day after day talking about STX, a blind man can know that I'm liking STX. A blind man or a woman can know that I think the UVXY is going down. All right, next slide, please. So yeah, it doesn't surprise me. Oh, this is it yesterday. I'm glad I have this one. So SIMO. Somebody asked me yesterday, hey, dude, what do you think about this stock? I looked at the chart. I said, it could spike. If it spikes, I think you'd get out around 65.50 or something like that. Remember to plan ahead. So you look at your options. You look at the delta of the option. So when it spikes to 65.50, you know what someone's willing to pay for your option. So what happened this morning? That shit spiked to $66. My man made money. He sold on the spike. And I don't know if he re-entered. I asked him around like 11 a.m. Hey, dude, did you re-enter? He said, I'm looking for a best entry. So maybe he waited to the end of the day. Point is, he made his money, exited out. That's what I teach. You wait on the side for the best entry, and you do it again. Next slide, please. All right. Okay. Yeah, this is what I was talking about. So charge point, right? I alerted pre-market 2 mornings ago, minus 4%. It was only minus 2% at open or something to that. This dude bought some puts. He made 108%. All right. The stock went down 10% yesterday, and it went down 7% today. Okay. Who knows if the offering is closed? I'm not saying there's not more to go. So when we make profit, we're happy with like 108%. We're not saying, oh, I need the max 218%. He'll add this to the spreadsheet, and he'll know the next time maybe he could have got another $10 or $20 per contract. That's how you use the max profit on the spreadsheet. So anybody that watched that lesson, that's how you do it. You just want to get more each time. You're not trying to secure 100% more. You're trying to secure an extra $5 or $10. So instead of asking for 110, you ask for 115. Instead of asking for 115, you ask for 120 or 125. You nibble. You get the extra $10. I'm telling you, you're missing out on max profit, but you're not going to get it every time. But if you nibble, you're going to get it every freaking time. So if you get $5 in and $10 out, and you make what, an extra 8 or 10% per trade, and you make how many trades? I mean, I traded how many options today? 600 options today. An extra 10 cents is what, $6,000? So understand, I'm saving myself money, and I'm teaching you guys to save money. That's like a coupon clipper. I'm teaching you guys how to clip coupons, how to get the sale. Okay, I slowed down because hopefully it makes sense. The light bulb's going off. I don't care what stock you're in, whatever it is, what option you're in. I don't care. You're looking at it. You're about to buy it, right? Whatever it is, for $240, you say to yourself, I'm probably going to miss by at least 10%. So let me take off 20 cents. Instead of paying $240, I'm going to pay $220. Now, if you're buying 10 contracts, you just saved yourself $200. Do you understand? So that's what I'm trying to get you. If you're buying 5 contracts, boom, $20, $100. Now, some people, some platform members like myself, you want to know why I plan in advance? Because I used to deal with a platform where I would have 400 to 500 contracts. And when I went to sell it, okay, and it was spiking the stock, they would have to get somebody's approval to okay me to sell 400 to 500 contracts. So what I did is I was like, if I put this order in pre-market, they can get it approved pre-market. Okay, Matt, what's going to happen? So say the stock spikes 5%. The stock would move $2.50. I look at the delta of my option, and I'm like, okay, if it moves $2.50 and my delta is 0.8, let's say, the option price should move up $2. So let's say it's like $120, and I think it's going to move up $2. I'd be like, okay, sell my 400 contracts for $320. And they would say, sir, it's only $120 right now. I go, I know, but you guys, the way you operate, you take 15 minutes to approve each of my trades. And yes, I still use that service. That's Ally Bank. So Ally Bank, thumbs down. You're in the shitter, okay? I also mentioned Bank of America, probably going to have bad earnings. I don't know if the earnings came out, but I saw they were in the shitter today. All right, so we did lessons. We did slides. I told you guys how the institutions, if you're new, go back and watch, all right? The institutions, the hedge funds, they are on Wall Street. They're at their homes in Montauk right now, in the Hamptons, big cigars, right? Because they steal money from you. And when I say you, I mean us, the retail traders of the world. Now, how do they do that? Because before my platform, give you an example. Dude said to me, stock's going down. It was Apple. Stock was going down. He said, okay, I went to buy and then it turned up already. I missed my opportunity. Yes, because we plan ahead. The same way I just explained how I sell my options. Pre-market, I put in the plan to sell it. I anticipate a 5% spike or whatever the spike is, and I put the order and sell. Now, if it doesn't execute, it doesn't execute. If it spikes, it spikes. The same way when the stock is dropping, okay, you see the option is $260. You say, I would pay $225. Now, as it's dropping, somebody's looking and they go, shit, I'm going to sell it to you for $225. They sell it to you, and then all of a sudden the stock stops and spikes back up. So you wonder how it got executed at $225 and it's currently $250. I mean, literally 2 minutes after you bought it, you're up like 8%. You're like, how is that possible? Who is dumb enough to sell it to me? Computers, algorithms. So when I teach you to plan ahead, that's what it's about. So hopefully you guys all had the freaking light bulb moment and you're like, okay, yeah, his platform's good. Plan ahead. He's not telling me pushing stocks on me. I don't want to push stocks on you. I hope I'm right about my plays, and my plays do pretty darn good when I average down. None of my plays are perfect. Yeah, there was a streak of like 5 straight weeks. Whatever I said, as soon as I said it, it just popped. But that was when the market was somewhat decent where I could identify volume and demand. Now that the market wants to shit on itself day after day, you really have to do the psychology of trading. You still have to find those same stocks. It's still a stock picker's market. So I'll mention STX again, all right? But you have to plan ahead. So STX isn't just going to spike to ridiculous amounts. When it spikes tomorrow morning, I'll give you an example. If it spikes, so I'll make up a number. Let's say it spikes to 92.60, and it's like 91.40 right now. If it spikes to 92.60, I'm out. It goes to 92.60, and then if it goes back to 91.40, I'm back in again. So I like the stock. I'm back in, but it's securing profit. So let's say you don't have a day trade. Can you still do it? Yes. I carried my STX over till tomorrow. So in the morning, when it spikes, I sell. All right? I didn't use a day trade. Now I'm buying the same freaking position when it drops 20%. So the point is, I sell something for $300 per contract. When it goes to $240, I buy the same contract back. I'm improving my portfolio, or that piece of my portfolio, by 30%. All right. It's not about riding up and riding something down. All right. Let's get to some questions and comments. If you came late and you want to ask, yeah, you can use this sticker thing on the side and tip me so I can get some pizza and beer. Super sticker. That's what it's called. So I appreciate everybody. That's very good. I appreciate it. So first, let me apologize. I didn't mean to get upset to my platform members today. But again, if I talk about 5 different stocks, but I mentioned STX 1883 times and the other ones like XL, I'm doing the stupidest thing. I'll admit it. I spent $2,500 on XL options thinking it would pop. $2,500. So when I start the tweet by this could be the dumbest thing that I've done all day or something like that, please don't ask me what we're buying it at, because I told you guys don't enter. When I say on July 5th that Tiger and other Chinese stocks are being heavily shorted, don't ask me if we should average down or something like that. The signal is get rid of it. Okay, so I mentioned CCL today, Carnival, right? I just mentioned it before that. So, this is what I want to tell you guys. So before we get to this question, somebody mentioned sweeps. So here are sweeps, right? There are bullish sweeps, calls, which means you think the stock is going up. So it's a call. Now it's a bullish call if you're paying the ask. So a sweep means they're sweeping all the contracts off the table. So let's give an example. Let's say Snap is going to $200, all right? And I want to buy all those off the table. So I buy the calls, I sweep, and it's a bullish sweep because I pay the ask of everybody's asking. Now, if it's a bearish call, because that gets confusing. You're like, how could it be a bear but a call? If it's a bearish call, it means I am offering the bid, all the bids. I'm meeting all the bids out there, but it's bearish. So I'm waiting for the stock to come down a little to get my order executed for all the sweeps. So they're sweeping like every strike price of that date, or they're sweeping, the strike, whatever it is. Okay, same thing. If you're buying puts and you see it's a bullish put sweep, okay? That means, first of all, it's a put sweep, which means it's going down. They think it's going down. What they're bullish about is they're paying the ask. So they're paying what everybody's asking for. Oh, you're asking $3, I'll buy it. $3, I'll buy it. Whatever it is. Now, if it's a bearish put sweep, which is just the last option, okay, then we'll get into the questions, comments. Bearish put sweep means they're paying the bid. If the bid is $280 and the ask is $3, they're saying, okay, $280 on those puts. That's fine. Okay, $320 on that put. That's fine. They're putting in the bid. All right. So again, you could be a sweep means they're buying all of them. All right. A bullish call sweep means call means up. Put means down. Okay, call up, put down, sweep is all of them. The only thing you don't need to know is bullish means they're buying the ask, or bearish means they're waiting for the bid to get hit. Okay, simple as that. I will never answer that question again. If you missed it, this is episode, 60. Right, it's in my memory. All right, you mentioned CCL today on Twitter. Why am I so bullish? I'm actually not bullish on both of them. Right now, it looks like they're going to go down. Maybe another, or they're just going to hover. They're not going to break 23, and Delta will probably struggle. But I am bullish long term. So if you tell me, and here's my prediction, which I say every day, so we do this every day. Carnival, $50 come October, which my options expire. Delta, $60 come September, okay? So yeah, that's like what, 2.5 months. It's got to move 50%. But you know what? The economy's coming back to normal. People don't care. They're flying. I look at the numbers every day. And when the cruise ship starts, so my problem with Carnival is somebody did the bearish sweep, which means they bought all these sweeps saying Carnival's not going to break $23 by this Friday. So again, I am bullish on Carnival. I just don't think it might happen tomorrow or the next day. I got out of my Carnival position this morning. I didn't know this was going to happen, but when it spiked to 33 cents and it was struggling to break, what, $27 or $28? No, $23. So when it went from 23 to like 23.30, I'm like, geez, that's a gift. I didn't know this was going to break 23 this morning. So I was like, all right, let me get out. Let me secure profit and move on. All right, next question. Yeah, so you can have calls for those. But again, if you have calls, I want you out to like January. I want you out to like October. Okay. So AMC, I already mentioned. So AMC, here's the bad thing. And here it's the same thing with GameStop. You guys must feel it every day. It would suck if all I owned was AMC and it dropped 15% today or 10%. Let's look it up because I don't want to give you guys misinformation. So AMC was off 15% today, 2% after hours. Okay. Yesterday, I know for a fact because it was off 7.5%. The day before it was off 7%. So you're talking about 32%, okay, in 3 days. You could be an ape all you want, but you got to love money. If you don't love money, you shouldn't be in the market. So, I mean, Ryan, what would I do, man? Let me just look. I bet you the volume. Oh, the volume is pretty big today. It's going down further, especially if the Dow continues to get hit. Now, what would you need to spike AMC? Somebody would have to say, I'm investing a lot of money here, like a hedgie or something like that. Or they would have to come out and say they made money somehow off something else and they're not going to do another offering or some shit like that. And you would see the spike. If you saw a spike from like 33 to 36, don't think you missed out. When you do get the reversal, it's going to fly. But if it goes down to $19 first before reversing back to 40, you want to be in at 19. All right. So TWLO is Twilio, right? Twilio. All right. So here's the thing on Twilio. Twilio is a fintech company. Twilio usually has light volume and it's crazy expensive, which means it's going to move substantially. Okay. Now, and what else about it? Being that we're in the summertime and it's light volume already, okay, let's just look. It did 1.4 million today. It usually does 1.9 million. So it did, 25% less than average. That's going to be the case. So as long as they're selling off, and they've been selling off of 7 out of the last 10 days, and on June 25th, a lot of people unloaded. Volume was high. It was probably hedges and institutions. So, yeah, I'd be careful this one. This one could retract back to 346, which would be 30 points, which would be about 10%. I wouldn't be a player in either of those unless you had puts. And again, somebody followed me into AMC puts yesterday and made 30% today. Yes, we could have made more, right? It was down 15% this stock. We could have made more. The point is 30% is 30%. If I put together $4,500 and I make 30%, that's about $1,400. What am I looking for? People on my platform, the ones that are trying to hit home runs, grand slam home runs, and just make like 5 or 10,000 per trade, you're doing it wrong. That's not what we do. You secure profit. If you've got $5,000 invested, that's $1,000. All right. You do it another time during the day, and then you repeat it for 35 straight trading sessions, and that's where you get your 70,000. And that one's for you, Russ. Okay. So I don't care if you have to clear out your positions. If you look at the Dow and you say the Dow's going to throw up, and you want to be out of Delta, Carnival, or whatever, and you want to be out tomorrow, and you lick your wounds, and you're like, all right, well, I'm going to go tech, and I'm going to go demand. Let me see what tech stocks are in demand. Now, what tech stocks are in demand? Big freaking tech. The FANG. All right, so anything you want a tech stock? Facebook is at 340, 350. It's going to 400. What else do you want? Netflix is at 550. It's going to 600. All right, that's 10% right there. When's it going there? It's going there in the next 20 trading sessions. Let's remember. All right, I said tech was strong about 20 trading sessions ago when they said that nothing was happening with interest rates. And I say, if they don't do anything with interest rates and the Fed doesn't act, the NASDAQ can go up another 15 to 20%. Well, you've seen it. What did Apple do today? Even when the market started selling off a little bit, Apple 149 and holding. Shit is big, man. All right, I'm not a financial advisor, but if you do like my content, give me thumbs up. If you're one of the 3 people that likes to kick cats and kids around and give me a thumbs down, that's for you, man. Kill them with kindness. Hey, Matt, 2 T's, bacon. All right, this would be great to remind everybody not to ask me questions during the day. Okay, yeah, so the whole thing is during the day, I ask my platform, and I still answer questions, which is just me. I feel guilty, which I've said before, so I answer questions. I still get a few DMs. I answer them sometimes. I try not to, and I don't want to. But when there are questions like, hey, did you sell this? I don't think you sold this. Or there's someone that's so confused, I have to answer. It sucks, but I'd rather just point shit out during the day, use YouTube to do a quick summary, give you quick slides, and we'll spend an hour on questions. I don't give a shit. I mean, worst case scenario, you're holding something overnight, and if you're in a bad enough scenario where you need to ask a question about it, then it probably doesn't matter. Maybe your luck will turn. All right, but I thank you, Mr. Bacon. All right, next question, please. All right. Delta, $45 Jan calls, down 45%. Using 42 calls in the money. Do you see going? Okay, here's the great thing about your position, okay? Now, I did mine today when Delta dropped and Carnival dropped. And yes, I even knew that they're trying to keep Carnival under 23. I have now, I wish I could pull up my spreadsheet. I think I have like 250 Delta options and 250 Carnival. Now, here's the thing. Carnival is at $25 strike price. I think my average now is less than $2. So $27 by October 15th of this year. Okay, that's my break even. $27. So when I tell you guys that I think it's going to 50, let's say it doesn't go to 50. Let's say it goes to 35, and each of my contracts is worth $1,000. The same contracts that are currently worth $2.10 will be worth $2.10 each. Will be worth $1,000. So yes, when I tell you to go out to January with these, and you're down 45%. Congratulations, you just created a freaking sale for yourself. So yes, you would use double the amount of money. So I don't know how much you use to start these. Let's say you use $1,200. You'd spend double, $2,400. You go out to January and you spend your $2,400. Now, if you only want to spend part of it because you think it could go down to 39 or something like that, I don't see that. So let me look and tell you where support is for Delta. Again, we saw people buying today. And what did I tell you? When Delta was selling off and the outflow was great today, who the hell was buying at $40? I'm going to tell you, the institutions are buying. And I saw some calls get ripped off, some leap year calls, and I tweeted about it as well. There were Delta leap year calls. So the same ones you're looking at, I would buy the $40 calls because we're at $40 now, okay? So $40 calls, I'd spend your $2,500 that way. Next question or comment, please. Jumia beaten up. Yeah. Ooh. July 23rd, 27.5. Oh, God. Oh, probably cut your losses. I'll have to look at the stock. But Jumia, so here's what I want to mention about any four-letter stock, which is why I almost sold plug this morning, which I should have done, and I admit I was wrong. But I tweeted, and then I got talked out of it because after hours I saw it spike, and I tell you guys, bullshit after hours. So when it spiked 2 to 3% and I changed my mind, it's on me for being stupid. All right? And people are watching this like, guy calls himself stupid, but he calls himself smart. Yes, I'm bipolar as well. How about that? All right, Jumia. Wow. 3, 5, 8. 8 out of 10 days, heavy outflow. Even during the inflow days, which were June 26th and June 27th, it kind of peaked and platformed at $31.50. I am surprised that it's under $23. It lost 7.7% today. It's at $22.72. Yeah. If you have $27 calls for next week, you're looking for this to bounce up, right? So what you're saying is it's $22.70 right now. So your call is $27.5. So for you really to make money, you need it to be closer to $29. So it's at $22. So you're saying it's going to go up $6, which is like 28%. So you're saying, hey, Matt, is there any chance in this beat up shitty market that my piece of crap stock, which has been beat down, could possibly go up 28% in the next 7 trading days? So I would say to you, stay the hell away, man. This is not the one you want to average down on. So people say, Matt, you average down on everything. No. If you're in something and it looks like a battered person from a fight, which this stock looks like, I'm just looking at the selling. I mean, today was brutal. Last 3 days must have been brutal for you. You thought maybe it would turn around at like $24.5, $25. I know what was going on in your mind, I guess, because I see the inflow day 3 days ago. And then the first day it went down a little. You're like, all right, maybe it'll have inflow tomorrow and pick up. Instead, it had 3 major outflow days. So I don't know what you can get for this. In fact, it's telling me there was unusual activity here. And they did a neutral trade, which means they didn't buy the bid. They didn't buy the ask. They put in their own price, which was a middle price. That's what neutral means. Okay, they bought the calls, which is a good sign for you, but they bought $24 call, okay, and they bought it out to August, all right? So that doesn't help you because they're saying by August, we think it's going to be good. So yes, if you wanted to average down and you wanted to follow that trade that I'm talking about on Webull that I read about, here's what you do. You use double the amount of money. So let's say you bought 2 contracts and you earned for $400. You would have to use $800. You would go out to August 20th, like the call I just told you about, August 20th, and you buy in the money. So if the stock's $22, you would do like $20, $21 calls, something to that extent. You understand? It's always about money management. So it's not about what stock or any stocks I'm putting you in or suggesting. It's about money management. I don't care what stock you're in, okay? I'll summarize it real quick. First of all, averaging down, episode 37. That I remember, all right? Here it is. Averaging down. You buy the same, you have a month out and you're down 40%. You buy the same strike price, the same expiration because you're in the money. You spend the same amount of money. It's like a 25% rule. One position, you buy a second position. Now, if you're changing anything, then it's real easy. You just double the amount of money that you put in. So your initial buy was $2,000, okay? Now you're going out a few months, all right? You're buying whatever strike in the money, but you're going out a few months. You're going to spend $4,000. You just double it, all right? I try and keep my rules simple. Same for my lessons. I simplify it. I show you guys what I'm seeing, and then I simplify it so you can understand it. That's why I'm here, to keep things simple. So that one, I hope you got your answer from. If you want to go out, I would probably, I mean, that looks like such a shitty position. I would try and get whatever money you can for that, and then I would use double the amount of money and go out till August. or even longer. If you really like GME and you're like, this is a real classy company, they're going to be fine, right? They do something big in Africa, I think. All right, AI, I'm hoping to sell off, blah, blah, blah. All right, AI, my stop loss got hit this morning. I sold it at an 82% loss. Again, I had 16 contracts at an 82% loss. I think I mentioned I lost $4,600. So when I mentioned the difference, okay, UVXY, STX, just today alone, between those two, I made $22,000, okay? Then you factor in XL, I lost $2,500. AI, I lost about $4,600, okay? My EBON options will be worthless. I think I'm losing about like $4,800 there. So not every one of my trades is successful. I'm transparent. That's why I'm sharing. I'm not saying I'm God's gift to anything, okay? I'm saying I know how to invest, and that's what I'm teaching you guys. So people that blow up their account, I'm sorry. You know, I'm sorry if you pick the wrong alert, or Tiger was so good to us for like 2 months, right? It went up to 22 and then it went down to 16. And I'm like, wait for demand. And we saw demand and we wrote it up to like $27 or $28. And then it just tanked. Since $28, down to 18. So it will eventually turn. Some people say $12, $15. Bullshit. I think $18 is more a platform, but we'll see. I mean, if tech throws up on itself, who knows what can happen? I don't think that's going to happen. Tech's at an all-time high. Let's talk about the 10-year. It went down to the point I said it needed to be in, 134 to 138. All right, now the real question. Do we assume the floor or delta is $30 range, or will this be a turnaround based on history? You're talking about delta still, right? So let me look it up. I think $30 is way too cheap, bro. If delta's $30, then Carnival's going back to $15, and that shit ain't happening. There was a massive sell-off, but there was buying all the way up to $44. I think it holds 40. I mean, so I guess we'll see, right? If it doesn't hold 40, I mean, it broke down, and the next support line is, yeah, it's $40. So I think it holds $40. That's the support line. And anybody for looking, I'm looking back at the 1-year chart, and I'm looking back to Delta in the January days, okay? Now, let's remember, January, tech was frothy, okay? Delta was not frothy. Delta was $40, okay? It scooped from $30 to $40 real quick, and then from $40 to $50 real quick. So it doesn't surprise me. It does surprise me at the amount of time. But I'll associate that with Bitcoin, okay? Yes, Delta and Bitcoin in the same sentence. Same shit. I'm surprised Bitcoin's hovering at 32,000, okay? I mean, we talk about the energy Bitcoin uses, but we already farmed 18.5 million Bitcoin. So the fact that Bitcoin's just sitting at 32,000, it's manipulation. I know some institutions are buying it, and the other ones are forcing it to. I really just don't get it. I get Binance is having trouble in the UK. There's a Chinese ban, India ban. So I guess that's forcing the price down or keeping it down. But all right, next one. Delta's not going to 30. No freaking way. Next question. We'll get some water in a second. eBay, Casey, dude. What do we do on the platform? We sell when it spikes. When it spikes to $70.30 this morning. How do I know it spiked to $70.30? Because that's when I sold my eBay position. I was actually $70.22. It was on the way up to $70.30, or it might have been even $70.40. Who knows how high? The point is, we don't wait. We plan ahead. So if you're holding that option, I don't know how much you were up. Maybe 10, 12%, and maybe you're down now. Maybe you're down 20 or 30%. The point is, we don't do that. So you got to plan ahead. You got to plan for the spike. Now, let me take a break real quick. All right, the break is, if you're watching me this long, please, I asked you before, give me thumbs up. Everything's analytics here. Make a comment. If I get more comments, YouTube will show this because it shows the interaction between you and I. And yes, those 3 dirtbags that give me thumbs down, stop watching, dude. I don't know why you're watching 48 minutes into my segment, man. I'm trying to help people, and you give me thumbs down. All right, anyway, please share this. Everything, Carlos, me, John, Boris, yes, there are now 4 of us. Everything we do is organic. Meaning, we don't pay for marketing. We don't push our shit out there. I don't say, yeah, you got to follow me. I don't give fake stock tips or call victories that aren't mine. I'm transparent, and when I have bad days, I say, this is what I did. This is how I ruined my day. Please learn from it. And then when I have good days, I say, this is what I did with STX or UVXY, or this is what I did with this position and how I turned it around. And hopefully you guys will learn on it. I'm not trying to give you positions. In fact, I love when my members say, hey, I use your strategy. Look, it spiked this morning and I got out, and they show me like 58% on stocks. I don't even know what the hell those stocks are. So yeah, I charge $349 to act as a teacher, mentor, and to make you more efficient. That's what this is about. All right, next question. Let's see what we got here. I see some questions on the side. Hey, Matt. Hey, Matt, can you look up CRM? All right, CRM is Salesforce. Provide thoughts. All right, so let's look at what it looks like. CRM. Okay, so it's a 3-letter stock, but it is tech related and it's sales related. So offices reopening, shit like that. Now the 1 year is what pulled up right away. Now I'm looking at the 3-month. It looks okay, but it be consolidating. So here's your point. Oh God, the 1 month looks terrible. So the good news about the 1 month is when you look at the 1 month, it could be bottoming out at 242. But when I look at the 3 month, if it breaks lower, then it could break all the way down to 228, which is $14, which is about 6%. So you've got a 6% downside. Now, if it spikes back up, you're probably going to get about $10, $12 out of it, which would be about 6%. So for me, I would stay away from that one. Anytime I have the same downside as upside, plus you're contingent upon the market. So if the market shits on itself, you're more likely it's going to go down. But anytime you have the same risk reward, you don't have a better 2-to-1 ratio. 2-to-1 ratio means on this potential trade, I can make 100%. If I'm wrong, I lose 50%. 100 is 2 times 50, 2-to-1. All right, I won't enter that. That's even. It's like 50-50, 60-40. It doesn't give you a good ratio. Next question, please. All right, Matt, you bought a call for 21 cents, then you sold it for 24 cents. How much money did I make? And your broker, Charles Sobbins, said I made $7. Another one said you made $1.67. You're confused. Okay, well, you made $3, okay? If you had one call, you bought it for $21. You paid $21. Let's assume they didn't pay, you didn't have to pay a brokerage fee. You sold it for $24, okay? So you made $3. If you had two, then boom, you made, probably $7. The point is, you made $3 of the 21 you put in. So you made 1/7. So you probably returned about 18%. So what I'm telling everybody is, doesn't matter how small your accounts are. You want to trade a $21 call and you plan ahead. You buy it for 21 when it's going down. And when it spikes to 24, again, I would look for a little more. But if it spikes to 24, you're making that $3, which is like 17.87%, okay? Close to 18%. That's how you have to look at it. Any size, you're looking for percent gain, okay? When I went in the UVXY today, boom, when it hit 65%, I was out. That's a lot of freaking money. All right, next question, please. All right, target for STX. Okay, so thank you for asking during YouTube because I know people ask me today, what's your target for STX? So I speak about it for 2 weeks straight, XTX going up, UVXY going down. What's my target? I said it's going to hit 90. I said now the good thing is this one likes to move after hours and pre-market, and when it does that sometimes it's like 2.5%, which would be like $1, $2. Get what I'm saying? So I expect it to breach 94. I'm not saying it's happening tomorrow because what have we been seeing with STX? It pops, and then it declines, struggles, and the end of the day does well. So I don't know. It's got, 6 straight inflow days. I mentioned this, that I knew it was coming. The great thing is you can go back 2 weeks and you can be like, dude was talking about it. It had 13 straight outflow days, and he's saying he sees the bottom. Why would he see the bottom? Remember all those questions I got? Hey, goofball, why you see the bottom on STX? Well, this is why. It just breached 90. Where is it after hours? Let's see where it is. All right, so my price target is when it hits 94, it's most likely going to go up to 98. When it hits 98, it's probably going to go up past. So, all right, well, it spiked back down, actually, but there's bids at $90.30. So let's say it's at $90.30. Okay, that's good. I don't care. It'll spike past 90. It'll go to 94. It'll come down. Then it'll go to 98. It'll come down to 96. Then it'll go to 100. That's what it does. It goes up, consolidates. But until I don't see demand, which means once I start seeing more outflow days, I'll stay away. Until then, it's like Tesla was last year. You keep reinvesting. Oh, options this week. Oh, options this week. Keeps going up. All right. Brian Williams is asking about AVXL because he asked me today about it, and I said, please say it for YouTube. So if I don't get to, because I don't know how far down it is, I did tell him to come today. So the 5-day looks like shit. You're off about 4%, but you were off 7% today. So you can't really look at the 5-day chart because today you had your worst day and it really took it down. So I'm assuming you don't have a position here. Now, here's the thing. The stock is pretty light volume at 2 million. It looks like it usually does like 6 million. So light volume days, but it's a mix. Honestly, this would be a 50-50. If it goes down, it could go back to $20, which would be 15%, okay? If it goes up, it could go up to $28, which would be like a $5 move, which would be 20%. So you have to be cautious. I do think you have more of a chance of it going up than down. And again, the stock for everybody was AVXL. There's more of a chance it goes up 20% than it does go down 15%, but either are possible. Super sticker. Thank you, dude. All right, next question, please. Sorry, I just saw one on the side. I remember this dude asked me. SEMO. Yes. You had double the average volume today. Do I think it'll spike again? I don't know. The great thing is that's the one you got out of, Joe John. So let's check it out. Let me look at SEMO. Let me look at it. I don't know why it spiked in the first place. You would probably know better than me. All right. It had heavy volume, and it's funny. The days that it spiked, I mean, volume's definitely picked up for this stock, but the volume was selling, and the volume was 2 to 3 times. No, I would stay clear of this one. The fact that you got a spike today and got out of it, and maybe it had news today. Earnings are expected 729. I don't like to hold stocks through earnings either, so no, I would stand clear of SEMO. Now, you might want to follow it. Have it on your watch list, okay? And then after the end of the month, July 30th, see what it does after earnings and see what it does normally after earnings. Here, look, let's see. After earnings, it spiked and then dropped. So, no, I wouldn't want to hold this one. Spiked and then dropped after earnings. It seems to spike after earnings and then drop. So you could look for it maybe the week before earnings. All right, next question, which would be July 22nd because earnings are July 29th. All right, thank you. Oh, thank you, dude. Extra pizza for everybody. Appreciate it. All right, next question, comment, please. All right, CVA Quavanta just acquired by EQT. I mean, I sound confused already. Any thoughts on it going higher? The deal is set to close Q4. So here's what I would say. If I knew about the deal and I read into the deal, then I would tell you. But without knowing the deal's the description of the deal, how many shares they're getting, what the price is, I couldn't tell you. And looking at the chart, if they already have some numbers in place, I don't know how it's moving higher or lower. Now, here's what could happen. Sometimes deals get in place, and then the value of the commodity goes up. Let's say a gold mining company. So gold spikes up, and then all of a sudden the deal doesn't make sense. They're like, oh, you're going to give us $160 a share, but gold's worth more. We want $200 a share. So I'm not really sure what this holding company does. I do see it spiked. Let me look at the 5-day here. No, it's been holding pretty flat here. Yeah, it looks like it's right about where it's going to be. I wouldn't mess with it. All right, next question, please. And sometimes when I think I figure out an algorithm that doesn't make sense because I know how many shares they're offering, I did something like that with AMD when they were buying Xelenex, and it didn't work out. It was off by like 6%. I bought one of them. It didn't catch up for like 3 months. So anytime you think you figured out a deal and you were ahead of the curve, no, computers, algorithms, Wall Street, they're all ahead of us. So we don't try and beat Wall Street that way. So if you missed the beginning, I talked about the market being manipulated by Wall Street. I mentioned certain stocks. I mentioned AMC, GameStop. Please go to the beginning, watch it. If you're with me so far, please give me a thumbs up down there. It's all algorithms. Pay this shit forward. Everything I do is to better your trading. Talking about it doesn't really help me. If I focus more on my trading, I'd probably have more money. But I know there are 30 million people out there. So when we have 1,100 members on our platform, which is great, there are 30 million new traders out there to 50 million, okay? So this is what I'm trying to get across. I'm trying to get somebody to share the video so somebody sees it, somebody gets alerted. I don't care if it's a trading group, and I don't care if they don't join my platform. I just want them following the YouTube so I can teach people. All right, YouTube will pay me. I don't care. All right, Delta again. Delta was beat up. I'm surprised you see indicators of reversal. All Caterpillar got drawn credit. So we know your thoughts on that. Do we see a shift? So I mentioned I thought Caterpillar, and I bought it at $215. I bought what I buy 2 contracts, and I paid $1,000 each, and they're worth $2,000. I think they're off 10%, maybe a little more today. What am I seeing? Caterpillar can technically go down to 205. I thought if it goes down, I thought the Dow would throw up on itself if it goes down, meaning it would have a 500-point off day. Caterpillar would bounce to 202, and then it would bounce up to 208, and then start the rebound. If that's the worst case scenario. The best case scenario is I'm right, and Delta's bottoming at 40, and Caterpillar's bottoming at 212, and Carnival's going to bottom 2280 or whatever it's going to stay for 2 days. Just like Bitcoin, bottoming at 30,000, 32,000, and we'll see an explosion. So that's what I'm shooting for. All right, next one. If I change my mind, I will alert those who bought the $1,000 option. So there is a chance if I change my mind and it goes down and it's worth like $7 and I'm off 30%. If I don't see a turnaround, I'll be like, all right, call it quits. I had 2 contracts out 600. You had 1. You're out 300. Okay, that's better. Okay, now listen to me. That's better than saying a month from now, dude, I was wrong about it. You guys were right. Caterpillar went down more. The Dow threw up more. And now our contracts that we paid $1,000 are currently worth $110. That's the worst thing. You're off 89%. No, I'd rather if I'm down 30% and it goes to $7, $6, I'll take the loss if I don't think I have time for a rebound or it's going to rebound. Matt, can I look at TSM? Yeah, please hit the like button. We haven't done that yet today. Well, I mean, I hit the like button at least 200 times because everybody knows that the 160 people currently watching are all coming from my IP address because I watch myself all the time. All right, TSM. Ooh, TSN. TSM. Oh, what? Yeah, okay, TSM. You know I love TSM. Well, I mean, it's this massive semi-stock. Yeah, breakout. Are you kidding me? It's been breaking out for days. It has the same freaking chart. It has the same freaking chart as STX. It has the same chart of MU. It has the same chart of MC. What is it? CPT or something like that. Microchip. The point is, all these chip makers have strong inflow. So if you think it's going to stop, I mentioned it. No, you could be in Taiwan Semiconductor. That's fine. You could be a Micron Technology. That's fine. As long as you see demand over and over, then keep buying those options, those call options. When it spikes and goes up, we're going to keep making money. All right, one more question. Let's call it a day, all right? I'm not a financial advisor. Please pay this shit forward. Share it with somebody, all right? I love you guys. All right, I guess we're done. It's quitting time. All right, everybody. See you guys. Thanks so much for watching.